Pitfalls to avoid in trading. In this video, we will learn about common mistakes made by traders, which results in them getting trapped in a trade, or take a big loss in an otherwise controllable trade. We will also learn about best practices to following in trading, and how to avoid the common mistakes done by traders. Revenge trading. Symptoms of revenge trading are: immediately re-entering a trade after being stopped out. Trading in the same stock/instrument over and over again to make it profitable. Desperately wanting to earn the lost money back. Ways to avoid revenge trading are: never immediately enter a trade into the same security again after being stopped out. Never think about the previous trade before entering the next trade. Step back from the screen, move out, have a coffee and return only when you are not thinking about the lost trade. Averaging. Symptoms for averaging are: buying more shares at a lower price, to reduce the average buy price, even when the trade is in loss. Averaging the trade with the hope that price will recover slightly. Trying to get the cost of buying/selling down and get out of trade with minimum loss. Ways to avoid averaging are: make a rule to never average a losing trade. Put all stop losses in system. Whenever the mind starts hoping, exit the trade and take a break. Control of trade should never be lost. A lost control is the first sign to get out of the trade. Holding on to a losing trade. Symptoms. Keep moving stop loss as it arrives in system. Thinking it is too late to exit. Loss becomes bigger than can emotionally handle. Hoping that market may recover and give an opportunity to exit at cost/small loss. Ways to avoid. Put stop loss and target in system and forget about trade. Never take a trade without a stop loss in system. Stop watching the screen if stop loss is near. Walk out and come back later. Never move a stop loss backwards. Overtrading. Overtrading is either taking too many trades or betting too much on a single trade. Overtrading is especially prone in range-bound markets. When overtrading, market direction view keeps changing from buy to sell and vice versa. Taking more risk than planned. Ways to avoid overtrading are: make a rule for maximum number of open trades. Make a rule for maximum number of trades in a day. Make a rule for maximum loss in day/week/month. Stop trading if this limit hits. Impulsive trading. Symptoms of impulsive trading are: trading without logic on gut feeling. Trading on news of expectation of news. Trading after seeing the market rapidly declining or rising. Seeing a trade when there is none. Ways to avoid impulsive trading are: trade using charts. Do not see the ticker. Trade only on predefined system. Limit maximum number of trades and maximum loss in a day. Do not watch news or follow market-related stuff during market hours, except for your system. Overanalysis, less execution. Symptoms. Spending too much time in analyzing the market. Even after planning a trade, having difficulty in pulling the trigger at right time. Thinking in hindsight that particular move known to the trader, still could not make money. Ways to avoid are: develop system in such a way that one stock analysis should be done in less than 5 minutes. Once plan is done, try to put pre-orders in the system, rather than waiting for the right time. Hire someone else to do the execution. Trick to never get trapped in a wrong trade is to always follow stop loss. You decide when to exit a bad trade, no one else. Thank you for watching this video. Please like and subscribe to our channel if you liked this video.